morning, New Jersey. I am your host, Liz Vaynerchuk Novello, and I'm not even sure. I think this is episode 4. I'm super excited because today my friend, Brian Woltman, will be joining us from Embrace Home Loans. And sorry for the delay. We had a little technical difficulty, but we are here on this Saturday morning. So welcome, Brian, to the show.
What's happening? Hey.
Hey. As you could just see from our hey, we clicked instantly. And Brian has been helping a ton of my clients secure a loan and much more. We'll get into that. But first, Brian, why don't you introduce yourself?
Yeah, Brian Woltman with Embrace Home Loans. I'm the producing branch manager of Basking Ridge, but I am the mortgage do-it-all, I guess it is. So yeah, I'm out here in West Jersey, and I'm excited to be here. So thanks for having me. I've been looking forward to this. So this should be some fun. So
we should probably share. We'll have to share if we have time how we met, things like that. But first, I think let's bring some value to the people watching this morning. So I want to talk about interest rates, and I'm sure you talk about this and you dream about this every single day.
Right in, huh?
I'm jumping in. I'm not wasting any time.
You don't want to know my favorite color. We're just going to go
nothing. Right. We're just bringing straight up value. So let's discuss the interest rates, because this week alone, I have heard that interest rates have gone up. As a potential buyer myself, I've been telling you I've been considering a move, not from Basking Ridge, just a move up because we need some office space. Please share with the audience what that means. Why have interest rates, we've been screaming historically low interest rates, which they still are. But can you share with anybody who might feel pressured to now buy because they heard it went up by a point or two?
All right. So
not even a point.
Yep, I'm with you. So this has been this has kind of been the talk of the industry for the past 10 days. So let me just kind of, set, a scenario for you. So 2 weeks ago, we were heavily entrenched in 30-year mortgage rates in the mid-twos, 2.5, 2.625. Everything was, hunky-dory. Everything looked great. I'd say that over the past 10 days, we have, we've lost maybe a half to 3/4 of a point in 10 days, that's ridiculously drastic, right? So, I think the average interest rate now is, between 3% and 3.25%. And in a 10-day span, that's enormous. Okay. That's a huge jump. So why is that happening? Well, you're seeing three things happen.
Yeah.
You're seeing 3 things happening, right? You're seeing, an increase in vaccinations. Okay. Right. You're seeing a decrease in cases, but that decrease, listen, we're still in the thousands per day, but we're in the lesser thousands per day, right? And you're starting to see, just last night, I think when I woke up this morning, I think I saw at 2:00 in the morning, the House passed, or, they passed their part of the COVID relief bill, right? So what's happening is there's sort of kind of maybe a little bit of a light at the end of the tunnel. The market is looking for, a reason to be bullish and be excited about an economic comeback. And these past 10 days have been a very volatile, kick in the pants to interest rates, right? So, just to kind of, let you guys know how volatile it is, today's Saturday. So 2 days ago, Thursday, we had a ridiculously terrible day for interest rates. We lost almost 1/4 of a point in one day, which is super volatile, very drastic. Then yesterday, we had the same amount of volatility, but just a pullback in rates. So we got that whole 1/4 point back in 24 hours, right? That doesn't normally happen. See, the interesting part about this is rates just right now are going up almost as quickly as they came down 12 months ago, right? So what's happening is you have a market that wants to come out of, some people are calling this a recession or whatever it is, but
it's not a housing recession. So I just want to make that right. But, that's a whole different animal.
They want to come out of this. They want to have a reason to come out of this, and they're starting to feel that reason. But the market isn't ready to dive into the deep end with it yet, right? So you're seeing, it's looking good. Oh, no, it's not looking good. It's going to be, an up and down kind of rocky scenario until things start to even out a little bit. But I think perspective is super important in this situation because, listen, whether your rate's 2.5%, 2.75%, 3%, guys, these are still the lowest rates you will probably ever see in your lifetime.
I mean, in the 80s, right? In the 80s, what were those percentages? Like, I remember, like, Reagan, right? I mean, I think when my parents bought it, it was really out of control. So these are still historically low interest rates, but just like everybody's watching, I myself was like, wait, I don't want those interest rates to go up. I want more bang for my buck, right? And so what's the projection? Like, are we going to see this roller coaster as we're seeing it? I call real estate in general a roller coaster ride. Like, sometimes you feel super high and then it comes crashing down. So speak to me about, what do you project as happening?
Well, here's the thing. Like, I think we can all agree that, even though we're all used to, 2% interest rates or, high twos, low threes, this is not where a healthy economy should be, right? So the interesting part for me is I do a lot of first-time home buyer clients, right? And a lot of these kids who are now buying their first homes in their 20s or their early 30s, they have grown up in an interest rate environment that has been 2s, 3s, and 4s for a majority of their life, right?
Sure.
When I got into this industry 15 years ago, rates were in the 6s and 7s, and that was considered low, right?
Correct.
So what you have to understand is that the rates are going to come back, the rates are going to move up. If you can take advantage of this marketplace, obviously, absolutely do so. But it is a matter of time before things, start to creep up a little bit. But, people, there are economists that we pay attention to who predict the bond market and mortgage-backed securities, and they say there may be another refi boom, down the road. I mean, I think a lot of this comes to whether we believe or don't believe in, these highs that we're seeing in the stock market right now, right? So the stock market is at an all-time high. It's at an all-time high every single day that it closes.
Sure.
So do we think that's real, or do we think that's a bubble? If we think that's real, then the rates are going to start to go. If that bursts and the market, drops, tanks, cuts in half, whatever, rates are going to come right back down. So there's a lot that I think we don't know about in terms of how bad the economy is or isn't. And I think as that plays out over time, you're going to see a reflection of that in mortgage rates.
Can we speak about, and somebody who should jump on this right now before rates go up are people that want to refinance. And we had a conversation a few months ago. I'm at a low rate, but I asked you, should I refinance? And you said you're planning to move, so definitely not. Can we talk about people that should be refinancing right now? Who are the people that should be refinancing? So definitely not the people who are considering a move.
Right, of course. All right. So, the last 12 months, this refinance market has been like a something for everyone kind of market, right? I mean, listen, whether you want to lower your rate and just lower your payment, pay your house off quicker, consolidate debt, renovate your house, which has been a huge one. And that's contributing to why lumber prices are so ridiculously high.
Oh gosh, right? Correct. Yeah.
So it's been a something for everyone market the past 12 months. As rates start to creep up a little bit, some of the people who are in the mid 3s, mid 3% range, who should have refinanced 12 months ago, are not going to see the kind of value that they're expecting to see, right? But there's still plenty of opportunity, especially for people who, like I said, want to consolidate debt, have adjustable rate mortgages, have second mortgages that they want to, roll into their first mortgage. I mean, there's still so much potential. 15-year rates are still in the 2s, right? So if you have a rate that is in the high 3s or 4s and you're thinking about paying the house off quicker, that 15-year is still a beautiful, very tempting thing right now. So
go ahead.
No, I was saying there's plenty of opportunity. It's just a matter of, when this refi boom is over, there should be nobody, in a perfect world, there'd be nobody left with rates with a 4 in front of it. There'd be nobody left with rates in the high.
So if you have a 4, get on the refinance right now. There's no reason.
Right, absolutely.
And if you haven't done it, it's still okay. Brian can help you get that done quickly. The other thing I want to talk about is when you're talking about paying off your loan, right? And this always piques my interest, and you could shed some education and light on this. When you pay, and I think it's dependent on your loan, and you should know a lot about it because even 14 years ago when I got my loan, I knew nothing and probably didn't know anything for, way too long. But something that I want to talk about is paying towards your principal if you can. Thanks, Jenna, for tuning in. If you can. So let's talk about paying off your loan faster. Do people just put as much money as they can towards their mortgage payment and anything extra above that mortgage payment? Let's say your mortgage is $2,000 and you pay $2,500. Does the $500 go towards your loan? Let's talk about paying off your loan.
Okay, so there's a couple different ways to look at paying off your loan or paying down your loan. Okay, because some people are trying to accomplish two different goals here, right? So the first goal, obviously, the one that comes to mind is, hey, I want to pay my mortgage off quicker. Okay, so first and foremost, if I want to pay my mortgage off quicker, just to tie it back to what we just spoke about, first I look at a refinance and see if I can get into a shorter term with a lower interest rate. Because as soon as you close on that loan, immediately each payment you make is going to have more money going towards your principal and less money going towards your interest, right? So you really want to pay attention to what your split is right now and how much is going towards principal and how much is going towards interest. All right. Now, if you have money that is available to put down on your principal, yeah, then of course, absolutely. A lot of people are doing biweekly payments now, right? And when you do a biweekly payment, you're going to end up making a couple extra payments a year, and that's going to pull years off of the back end of your mortgage, right? So of course, if you have the excess cash, you want to make principal reductions, you can totally do that. When you make a principal reduction, it's just going to you're going to realize the gains of that when you pay your loan off sooner than what the expected payoff date is.
But
right?
Am I right that you should know that if you pay off your loan earlier, sometimes there could be some fees, right?
Well, there's no prepayment penalties in New Jersey. So in New
Okay.
Jersey, you can pay any
Great to
amount you
know.
want at any time. I mean,
Really? Well, you have to pay your mortgage, not
Right.
any amount.
Right. Well,
Well, you can't. Right. That's a
you
whole
can pay any
different
amount
stuff.
to your mortgage
Right.
at any time, right?
Right.
So I always joke with my clients. I say, listen, you can close Monday, hit the lottery Tuesday, pay it off on Wednesday. I mean, do you, right? There's no real negative effects there. But the other thing, which I think very few people know about, and I utilize this a lot, is and this is a little bit deeper of a conversation, but a lot of people have they say, Bri, I own a house right now. I want to buy another house, but I only have 5% down or a minimum amount of money to put down on this other house until I sell my current home, but I don't want to be home sale contingent, right?
Correct. Because in this market, being home sale contingent is like a scarlet letter A. I don't want to alarm anybody, but we are seeing homes that have multiple offer, and the most appealing offers usually the most money. It's not even always cash anymore. It's not always cash because these loans are coming through and you would be stunned. Like in this industry, we've always heard cash is king. Not if you're not going well above the asking price. So let's really tap into this because I have heard it. We have spoken about it. Even if you have the money, let's talk about even if you have the down deposit for the other house. And we were just talking about this. I have a potential client who wants to purchase another home, but you were saying like there has to be a certain percentage that their home loan compared to the ratio of how much they make or whatever. You share that.
So all right. So let me just kind of
backtrack. Do your thing. Yes.
Let me finish the thought and then we'll go right into that. So obviously, when you have a client who doesn't want to have a home sale contingency, because like you said, it is the scarlet letter in this market. I mean, sellers want to see, okay, I have an offer accepted. You have home inspections are done. You have, you have a closing date. People don't want to take an offer where it's like, hey, I really want to buy your house, but I have to sell mine and I don't have anything lined up. I mean, you're never going to get an offer accepted at that point, right? So what a lot of people will do is if we can pre-approve you to carry both mortgages at the same time for a very short period of time, and this kind of goes back to paying down the principal. Sure. What I utilize a lot is what's called a mortgage recast, RECAST, a recast. And what that essentially means is we would buy the new house with a minimal amount down, 5%, 10%, whatever it is you want to put down. Then when we sell your current home, we take that money, we take that big lump sum of cash that you wanted to put down, we would plop it down and pay down the new mortgage, right?
Correct.
And then we would do something that's called recasting your mortgage. And what that means is we would take the remaining balance that's left over and we spread it out over the remaining term of the loan, right? So if you started off with a $500,000 loan over 30 years and we pay 200 of it off, now we can recast. Now we've got 300,000 spread out over the remaining 29 and a half years.
But are you
and now your
paying?
payment drops.
But are you paying PMI?
You can get rid of the PMI at that point.
So anytime you bring in, let's talk about PMI since I brought it up.
Yeah.
So PMI is.
So with the PMI,
Well,
PMI is mortgage insurance, right? So what mortgage insurance is it's an insurance policy that you as the buyer pay, and it protects the lender in case of a default on the loan if you put down less than 20%, right? So the magic number is 20%. At 20%, you can request that your mortgage insurance is removed, right? Once you have 20% equity in the property. Once you, if you pay your mortgage payments normally on a regular basis, once you hit 78% loan to value or 22% equity in your property, it'll automatically fall off. Okay.
Got it.
But that mortgage insurance, once we get that mortgage down below 20%, we can petition for that to be removed as well. Right. So when you recast your mortgage, that's a way of paying down your balance and lowering your payment so that you had the payment that you were wanting to have originally if you had sold the house beforehand. Does that make sense?
Yes, makes sense. And I'll ask you these questions 900 more times because what I love about Brian is that he always answers his phone. I swear there was one time it went to voicemail. He called me a minute later. I was concerned. I was like, where is this guy? Is he gone forever? Because he always answers his phone. So our friend Ashley Molson in the house. Thank you, Ashley. Brian actually introduced us together to each other. Are the buyers at a loss with the high premium they have to pay at the closing?
Premium for what? What do you mean high premium?
Are the buyers at a loss with the high premium? Ashley, please
clarify.
Also, Stephen Ford would like to know what your Twitter handle is, Brian.
Oh my God, I don't have. Believe it or not, I'm all over
Brian,
Instagram. I'm all over Facebook.
Don't even tell me.
Twitter.
Oh, come on, Brian. Mitch Slater in the house. Thank you, Mitch, for always saying hello and watching this show. I really appreciate it. He wants to talk about loan modifications versus refi.
Oh my Lord. All right. So
Mitch, way to hit it. Yeah.
Wow, we're going in a totally different direction.
Wait, but quickly, Ashley's saying for the mortgage insurance.
Oh, well, I mean, listen, if you have to make a payment or two, then you have to make a payment or two. I mean, it's to be honest with you, that the mortgage insurance payment that you'll have to make pales in comparison to the heartbreak of not getting a house that you want,
Right.
So, the mortgage insurance will, if you have to make a couple payments and then pay it down, it kind of is what it is.
Let's do Mitch's question later because I still want to talk about pre-approvals. I mean, we could talk all day and I'm always very fascinated, and this is very insightful and helpful for everybody who is considering, who owns a house, who's considering, to buy, and also people who have had a mortgage forever and they don't even know what's going on with it. So those are, those people are out there too. So let's talk about pre-approval. The number one rule I learned my first year in real estate is not to take out any clients that are not pre-approved. It's essentially taking out people, like saying that you know what you can afford, wishing for, a golden star, and you might not even be able to qualify for the golden star. So you've spent days and weeks with somebody who's not even pre-approved. Let's talk about pre-approvals. For first-time home buyers, this is important for you to hear this because no agent who has been doing it more than 5 seconds knows that you should not be taken out unless you have a pre-approval. So let's talk about pre-approvals.
All right. So a pre-approval at its most basic form, and break it down to its most basic elements, is a letter that I would provide to the buyer that they're going to then give to their agent that basically states that they've had their finances looked at, right? So from my perspective, when I do pre-approval, what I'm looking at are three things. I'm looking at your credit, right? So first and foremost, we have to run your credit report. I need to see what your credit scores are and what your monthly.
What are good credit scores? What do you need?
You want to try. Listen, you can get financing all the way down, frankly, to a 600 or a 580 FICO, but you really want to try to, a good credit score. I don't know, over 700. I like to see typically if you can get there. But
what's an amazing credit score?
Oh, anything over 740 is A+, perfect prime credit, right? So, okay. And that's a big swath. It's 740 to 850. I mean, that's a giant swath. So if you're in there, you're going to get the best rates. It's going to be a
So rates are dependent on your credit score.
Well, that's one factor. What kind of house are you buying? How much are you putting down? I mean, there's a lot that goes into that.
Okay. So keep going. That's another show.
Right. That's another show. So first off is your credit, right? I'm looking at what your scores are, and I'm looking at what your monthly obligations are. So just the stuff that reports to you, the credit bureaus, car payments, credit cards, student loans, mortgages. I don't care about your electric bill. I don't care about your television bill, right? I'm just looking at what's reporting to the bureaus, okay? Secondly, your income. So how are you paid? W-2, salary, hourly, commission, bonus, self-employed. Those are all different types of income. So what I have to figure out is what income do I have and what can I use to support the file? And thirdly is your assets. So how much do we have earmarked for down payment and closing costs? And where's that money coming from? Is it coming from your checking, savings, 401k, gift money from parents, a combination thereof, right? And making sure that we can source that money, we know where it's coming from, because we have to be able to show the path of where that money came from to meet anti-money laundering regulations, right? So, once I have those three things and I have your profile built out, we go over the numbers, make sure you understand, where your payments are going to be in different price points, and try to come up with a place where, we have a happy medium of, this is a good amount of money out of my pocket, and this is a good payment for me and my family. And when you find that happy medium, that's where we have the pre-approval. And that letter will then let the realtor know that they can put you in the car and put the miles on their engine and take you all around town looking at houses. So.
And just because you got pre-approved at a certain rate, if you don't close, we've talked about this too. I have clients that are doing a new construction, and it's going to take many months to close on that deal. So can people lock in their rates? And what do you need to do to lock in a rate?
Yeah,
like, can you be 300 days out and lock in a rate?
No. So most interest rates, so most companies are going to lock your interest rate when you have a contract. All right. So once somebody has an agreed upon deal and we have a contract, at that point we have a loan, and that interest rate lock is tied to that address, right? So once I have a contract, I can lock a rate. Most rate locks are 60-day rate locks. You can do 75s, you can do 90s. Sometimes, there are even extended rate locks. But once you go beyond a typical 60-day rate lock, there's a premium involved to lock longer, because the risk of market movement becomes more prevalent, right? So
you're paying a fee.
Or it's financed into the rate that you would get for the longer term rate lock or whatever. But yeah, typically you're going to lock once you have application, and most rate locks are 60 days. And in New Jersey, unless there's extenuating circumstances, an average close in New Jersey is 30, 45, 60 days anyway. So.
Well, 30 is not always typical, but with you, we've never not had a 30-day. When I rate 30-day, and I know that they're getting their loan from you. But let's talk about even when I started 4 years ago, 30 days. I mean, the typical day we would write mortgage commitment would be, later on, and 45 was considered like mind blown that we're getting closed at. So that's not typical. It's typical today if you have the right team behind you. So also, what I always hear, and especially let's really gear this to people looking to buy a house, and they've never done it before. What are things that you should not do when you're buying a house? Like, what should you not do? What are the things that you stress? You give this talk to your people? I know that you can share a million things.
This is something that this is something I hit on with everybody. So, what I tell my clients is when you're trying to, before you buy the house, right? When we're pre-approved to the point where we close, we want to live a normal life. Now, what I mean by that
What's normal life?
Well, what I mean by that is, You want to go out to a restaurant and put on your credit card? Go ahead. You want to go clothes shop and buy some clothes? Whatever. That's just do the normal things, right? What we
Okay.
don't want to do, don't go buy a new car. Don't switch jobs. Don't co-sign on anything for anybody. I know my processor, Jen, she will love me for saying this. Do not move
Jen.
money all over God's creation, okay?
Where are you moving money to?
Oh, well, so here's what people do. They say, you know what? I'm getting money from my savings. I'm getting money from my 401k. I'm getting a gift from mom and dad. I'm liquidating some assets from my brokerage. And I think it's probably the right thing to do all of that and consolidate it all into one account, right? But if we're going to do that, we need to map those things out. So to all
Why?
the things that you shouldn't
Why?
do, well, because we have to track it all down, right? Just like kind of going back to what we were talking about before, there's money laundering guidelines that we have, or money laundering laws that we have to be able to source the funds, where they're coming from and where they're going. So if you take it from here and put it over,
have you ever found one?
No, thank God.
Oh,
No, I have
gosh.
not.
Okay.
Thank God. But
Good.
when you take money from here and you put it over there and you move it over here, I got to track all that, right? So it makes everybody's life difficult.
Do you or Jen? Jen's fantastic. Thank you for joining in. And Monica and Kat, as always, Chef Lizette, thank you for joining us this morning. I love talking about this for multiple reasons, but also because I like to get educated in my own, I think there's an age where you got to start understanding what bills and what things you have. And I think there's so much about mortgages and loans that you don't know about and that I've experienced or, through my clients. Something that you mentioned before were construction loans. A lot of people are thinking, listen, I'm not going to move. I love my house, but it's small. Now our lifestyle's a little different. I'm working from home now. So let's talk about construction loans.
Yeah, so I mean, these things have become just absolutely essential in the world that we live in because everybody wants to quarantine in the house of their dreams, right? And the house of their dreams doesn't necessarily mean that they have to go out and buy a new one.
Correct.
So these rental loans have really, really taken off over the past year. So, nowadays, I mean, with the loan programs that are out there, you can do anything you want to your house. I mean, and as long as it's permanently affixed to the property, pools, fences, basements, kitchens, bathrooms, whatever. You can do whatever it is you need to do. And the way these rental loans work is we get a contractor involved, all right? And guys, if this is something you're thinking of doing, this is the linchpin of the process, is having a good contractor that fills out the paperwork, responds to emails and text messages, and knows what they're doing, right? Because somebody like myself and my team, we can't do what we do until the contractor does what he needs to do, right? So
Sure.
If you have a contractor who's non-responsive, it's going to make this a difficult process. But you pick out a contractor's going to go out to the property. He's going to give us an estimate for work, labor, materials, all that stuff. And then what we're going to do is we're going to collect all of his information, his licenses, his insurances, the bid. We're going to vet him, make sure that he's competent to do the work, right? And then what we're going to do is we're going to send an appraiser out to the property, and the appraiser is going to give us two values on the house: a value of what it's worth now and a value of what it's going to be worth after the work is completed. And we will lend on the after improved value of the house, right? So when you close, there's a possibility that your loan amount is going to be more than what their house is worth because we've rolled in all the construction costs into your mortgage. But we know, based on the appraiser's valuation, that after the work is all complete, everything's going to fall in line, and we're going to have a house with the proper amount of equity in it. So these are, like I said, very popular. They're contributing to the high lumber prices. Everybody's at Home Depot buying everything, right?
It's unbelievable.
Yeah,
I learned about that with that new build client that I had last year. They were saying that the contractor was saying that the lumber's so expensive, and I was looking it up, and it's truth, and here we go.
I'm feeling the pain myself. I mean, I'm building a house right
Yes.
now. We're just at the framing stage, and I'm about.
You're like, get that lumber immediately.
I'm about.
Could I get some old
hard.
school lumber? Yeah. So first of all, let's tell everybody where you're from. We're not done talking. I feel like we could talk about this all day, but let's talk about where they can find you, because I want to answer Mitch's question, and then we're going to find out how Jersey is Brian Woltman. This is my How Jersey. This is going to be part of the show, How Jersey, and I figure I'd try it on you. So look down below. You can find him on IG, and also go ahead,
I'm on
Brian.
Facebook. Yeah, Brian Woltman. You'll see me. There's a little picture of me and my beautiful daughter there as my headshot. So
she's got you fully wrapped around her finger, and so, or you can call me. Happy DM me. Let's talk about Mitch's question because he is fantastic, always joining me every weekend. So let's bring him some value here. Loan modifications versus refinance.
All right. So Mitch, loan mods are not typically offered by, regular mortgage companies. That's something that your current mortgage company is most likely going to offer you, but you got to be careful with that stuff. Like if you can refinance, you're always better off refinancing. A lot of times, we ran into a lot of this when the market tanked back in '08, where mortgage companies were saying, hey, listen, you can modify, but you can only modify if you qualify to modify, and you qualify by not making mortgage payments, and and you have to be in a hardship situation, right? You got to be really careful with the terms that they're giving you for these modifications, because it's not something that you would want to do unless you have to do it. And listen, if they tell you to not make mortgage payments or something, that's gonna destroy your credit score. So I would stay away from that. If possible, refinance. If you have no other option, then talk to your servicer, your bank, about a modification. But always refi first if you can do that. So
let's hear how Jersey you are. Are you ready?
Oh boy, go ahead.
Do you love this? Do you love this? Okay.
I'm scared. Let's see. I don't even know how Jersey I am. I've been living here my whole life, so I guess I'm gonna find out.
So let's find out. So the first question: when you're from Jersey, what exit are you from?
Well, off of what? That's what kind off the Parkway?
All right, 287 78 Parkway. Which is your favorite highway?
287 gets me every place, obviously, but the Parkway's to the beach, right? So I think everybody in Jersey wants to go to the Parkway. But
and go ahead. What exit off 287 then?
23, Bedminster.
Okay. You know what's so funny? I love 78. But like on 280, I've taken 287 every time. I'm like, wait, which exit am I on 287? I have to look for the sign.
Well, it's really funny.
Is it 24?
You drive all over Jersey. I don't even know if they know the exit numbers. I just know where I'm getting off.
That's right. So I went to school in Vermont. They made fun of Jersey. They don't understand the Garden State is actually a beautiful state. We both grew up in country living. And so everybody always says, what exit are you from? How about pork roll or Taylor ham? What do you call it?
It's always pork roll. Anybody who says Taylor ham is completely wrong. It's pork roll, egg, and cheese all day long.
This is how Jersey you are. Have you ever had coffee from Wawa?
Have I ever had coffee from Wawa? Maybe once or twice. I'm not a coffee guy. I don't drink coffee, believe it or not.
What are you drinking in your cup right now?
Water.
Oh gosh, I'm not a water person, by the way.
Embrace Home Loans water.
I can't get my water in. I'd rather have an IV.
Believe it or not, Always Energy, no coffee.
Really?
No coffee.
Damn, I thought we were always, jiving on coffee. Great Adventure or Six Flags?
It's the same thing.
But it's Great Adventure and Six Flags they're not the same thing.
Six Flags Great Adventure. What's the difference?
Six Flags, I really think, but Great Adventure is like where you enter and they have, guys, maybe I'm not very Jersey.
When I go to Six Flags, it's either Six Flags or the Safari.
The Safari. Are you a Safari guy? Kidding.
No,
I don't even know. Already, when we talk about the shore, what do we say? We're going
to the beach.
Down the shore.
Down the shore.
Down the shore. It's always down the shore.
Yes, it's always down the shore. Absolutely.
Favorite diner?
Oh my God, where are you getting these questions from? You know what? I went to college at Monmouth University down the shore, right? So there was the All Seasons diner, and that was the diner after the bar. So
what were you getting there?
Oh my God. I don't know, I don't even necessarily remember what I was eating there. Probably hamburgers, French fries. I mean, after you go to the bar, it's something that it's going to put you to sleep afterwards.
Do you know what a jug handle is?
Of course. There's one right there in Bedminster. Absolutely. And that's something that we only know in New Jersey.
If you're from Jersey, jug handles. Exactly. Right. Have you ever gotten a free room at Atlantic City?
Yeah, of course. Absolutely. How have you not gotten a free room in Atlantic City?
If you're not from Jersey, maybe you haven't.
Of course.
So that is how we know that Brian's really Jersey.
I don't know if I passed that test or not. People may be skeptical.
I'm not sure with my Great Adventure Six Flags question.
I thought that was a trick question. I was like, you trying to fool me?
I'm trying to fool you. Anyway, Brian, you know we can talk for hours. You're always such a help. Thank you for answering. I always like to come in and pretend that it's a client's question. It's always my own question. And I appreciate you so much. So everybody,
I'm here.
Please give Brian a follow. You can message him. He loves talking about everything. So you could call him anytime. Thanks again for joining.
You're welcome. I've got a very deep passion for what I do. So if anybody ever needs anything at all, feel free to reach out. I don't care how big or small. I'm more than glad to help however I possibly can, and I sincerely mean that. So
awesome. Everybody, enjoy your Saturday. I'm off to, today's a busy day. I'm going to show an exclusive open house in Maplewood. That's a really hot market. And then I'm doing virtual tours for my client who lives in Pennsylvania, but far in, and doing some videos for them instead of having them schlep. So we're always here for you. Anyway, have the best day, Brian. Have the best day, guys. Talk soon.
Thanks for having me.